Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the crown of life, which God has promised to those who love him. Philippians chapter 4, verses 6 to 8. Do not be anxious about anything, but in everything by prayer and supplication with thanksgiving, let your requests be made known to God. And the peace of God, which surpasses all understanding, will guard your hearts and your minds in Christ Jesus. Finally, brothers, whatever is true, whatever is honorable, whatever is just, whatever is pure, whatever is lovely, whatever is commendable, if there is any excellence, if there is anything worthy of praise, think about these things.
Yo, good morning, everybody. Had a little bit of technical difficulties, but we're here. Hopefully you guys had a good weekend so far. We actually got a lot to discuss today. But yeah, we'll wait till more people get hop on before we get fully started. But yeah, obviously today is our Sunday prep call. Let me pull this up real quick. So for those of you that may be new, maybe watching me for the first time, every Sunday we do these types of calls. We're basically going over what we believe price is going to do. I answer questions. We go over a bunch of different assets. And I kind of just lay out my whole process, right? This process has been very effective over like the last, 3 years publicly, 5 years privately. And it seems that the market likes to dance to the tone that, we try to play. So I'm sure you'll learn a lot. If you guys do get value and you've been here for a while and you haven't subscribed yet, what are you doing? Right? Definitely go ahead and go do that. And like the video too if you guys get value from today. It definitely helps the channel a lot. But outside of that, before we get completely started, those of you that are on right now, do you guys have any particular questions? DJ, good morning. But yeah, if you guys got any questions, just let me know real quick. Go over here and double check some stuff real fast. Just bear with me for a minute. All right. So yeah, obviously throughout the call, you guys can ask any questions you want. I'll be here to answer them. But we're going to go through all these different things, okay? So the very first thing that we look at is Forex Factory. I'm actually going to go to my other resource too. Trading terminal. So tradingterminal.com is this website. Highly encourage you to go bookmark this. You get to go look at earnings. Earnings are important. So let's see what companies have stuff to do. Ooh, one of my favorite stocks, Marvell. If you haven't seen this company, I highly suggest that you look into it. I ended up discovering them when they were like $40 per share. They're now upwards of 200. They were at 300 this year. The CEO of NVIDIA is talking about how Marvell is going to be the next trillion-dollar company. And what they do is they create, from what I'm able to understand, custom silicone for custom chips. So they're obviously in the tech sector, but they're more of a pick and shovel type of technology company. So they make certain supplies and custom pieces. I'm sure there's other things to it, but that's the main thing. And they had partnerships with Amazon, Nvidia. And once I saw that, using our stock analysis process for long-term holding and just like evaluating companies, that thing passed with flying colors. And what a beautiful run. It was up like 400%. I was like, dude, it's nuts. But yeah, I should have put a lot more when I invested in them. But you got to manage risk, right? Snowflake, that's an interesting technology company too. There's not any like major earnings this week, so we don't really got much to worry about in terms of that. So we'll get out of that. So Forex Factory, we do have Monday. Scott Bessent is going to talk. So Treasury Secretary. We'll see what happens. It's obviously in PM session. It's not going to really bother us too much. There could be a slower moving market, but again, every time we look at the news, every time we start a new week, you got to think power three. So Sunday, Monday is accumulation manipulation. Tuesday, Wednesday is expansion. Thursday, Friday, if it hits a higher time frame PD array, it could end up presenting you with TGIF or the opposite end of that weekly candle. One thing you do want to pay attention to here is this Jackson Hole Symposium. This is treated, or at least the market treats it, similar to how pre-NFP type of delivery takes place. For whatever reason, I forgot what this is. It's like a bunch of bankers or something. Yeah, bankers, finance ministers. So it's a lot of conversations around the economy and forward outlook and different things like that. We do have the Fed chair speaking, so that's going to be interesting on Friday. So this week is going to be a more caution-led week. ICT himself has talked about this Jackson Hole Symposium. That's why I'm pointing it out. You got to be cautious around it because it can give you some iffy type of characteristics. So just keep that in mind. Obviously, don't go into any market fearful, but you got to know when it's time to pull back on the risk a little bit. Maybe lower your frequency. If you take more than 1 to 2 trades a day, you shouldn't be doing that anyway, if you're taking my opinion and listening to it. But you're going to do what you're going to do. You may have to get burned like I did. I had to be put in the fire, fry my whole financial stability until I realized it's like, all right, well, I probably got to change things because this isn't going to work. So we all hit that point at some point, and it just depends on how stubborn you are, right? We don't know everything. I don't know everything. And we definitely don't know really much of anything when we first get started. Within the first year, the first 2 years, you can, in my opinion, at least have a reasonable understanding of what it is you're trying to do, especially with ICT concepts. Other concepts, obviously, I can't speak to, but I've tried other concepts and they just didn't make any sense. And it was too random, right? Nothing we do is random. It's all calculated. Everything is predictable. And in moments where it's not predictable, we're able to identify it and, again, pull back on risk and wait for more predictable environments, okay? So, again, these are some of the risks from today. We do have some GDP conversations. So that's going to be interesting. Again, the numbers don't really matter. What matters is there a news event on these days or not? Because they're the excuses. You could have good numbers and the market could still tank. Think about it. Everybody thinks because of the good numbers, it's going to go higher. So what should they do since everything's manipulated? Oh, well, let's go the opposite way of the masses. And then you see people get wrecked doing pure fundamental analysis or putting too much stock in the numbers. It's good to know the numbers, but that's not what's going to make me personally decide what I should or shouldn't do. We have a lot of other things that allow for us to make those types of decisions a lot more effectively, as you can see, right? Through the last almost 3 years now, publicly. So yeah, we'll keep tabs on that. I do think because Sunday and Monday is generally accumulation manipulation, the start of the week, we should be able to see whatever our narrative is. Because of these news events, we should see price potentially use them to push against whatever that is, whether we're bullish or bearish. If we're bearish, we want to see the beginning of the week go higher, reach for a PD array of some kind, some liquidity, and then look to target lower, and you just flip it the other way for bullishness. If we're bullish, we want to see Sunday, Monday accumulate, manipulate against that, reach into a PD array of some kind below price, maybe some liquidity like equal lows, maybe a single low from the liquidity mapping list that I give you guys, which I'm gonna pull up before we get into other assets, or any of the assets, to be honest. And then of course, Tuesday, Wednesday, depending on where we're at, what it looks like, we're automatically going to assume power 3, bullish or bearish, is going to happen. And there's other profiles, but I like to push students into trying to anticipate those particular, profiles, because it's pretty typical, and that's what you want to see. If you can't see it and it's doing something else, again, you got to wait till you study the other profiles to really start to anticipate the other ones. But first and foremost, you got to start somewhere. Weekly profiles, daily profiles, they're very important. So they are part of the system and what you need to learn. But take your time with it, right? And study one at a time. But the very first thing you want to try to observe every week in terms of the profile for the weekly candle and daily candles is just a classic buy or sell day. Classic bullish or bearish power 3, where it accumulates, drops down below the open price, hits some type of PD array or liquidity, and then starts to accelerate to the upside. Same thing's true if it's bearish, right? Wait for it to consolidate, identify that, watch price get above the open price, hit a PD array or some liquidity, and then watch price accelerate to the downside towards one of our targets on the liquidity mapping list. So these are things that we have to think about when we look at the chart for the first time during the week. So like on Sunday, like we are right now, you want to get that baseline so you kind of understand or have like a framework to go off of instead of thinking randomly, because nothing's random, okay? And the more you study this with this perspective, the more significant, telltale signs you'll start to see when these news events come out within that framework, right, of Power 3 for the week. Okay? So, do you guys have any questions about news navigation or anything? I don't think I've asked that question in a while. I have got a question recently about the news from one of my one-on-one students, how we use the news with price delivery intraday. So yeah, maybe I'll talk about that at some point too. But yeah, if along the way you guys got questions, just let me know. So hopefully this makes sense. But with that being said, let's actually get moving on. Pull this liquidity mapping list up real quick. Actually pull the one from my one-on-one student notes. So at the beginning of the week, okay, you always want to start by doing what we just talked about, right? You want to think Power 3, and you want to really understand what liquidity pools are the best to focus on, okay? And in my opinion, and ICT's opinion, from what he's taught, what I've gathered over the years, these are your lists of liquidity that are the most common, okay, based on his teachings. So your higher time frame reference points are previous days highs and lows, weeks highs and lows, month highs and lows, the last 3 days highs and lows, and higher time frame PD arrays that are in close proximity to wherever price is at. So if we go on this daily chart, let's actually pull up one chart for right now. Okay, so if you look at this daily chart with the list that I just told you about, right, just this first section, okay? If we look at price from this perspective with that in mind, well, we have a previous week's high here, and we have a previous week's low. So we're inside that range. So all of this is insignificant until we get outside of this range. So whether it's going to pull up here or whether it's going to come down here, it's insignificant until we deal with what's happening in here, right? You can obviously go to the monthly chart, get the monthly candles high and low, which, of course is part of this, but, let's keep it more recent, right? So we got Friday's low here too. If you look at that list that I give you guys, is it in lower time frame reference? Yeah, got in the lower time frame reference. But you can still map it out right here and go like this, right? Friday's high and Friday's low. So if price opens up inside of this candle, which it's going to do most likely, unless it gives a gap outside of it, Friday's high and Friday's low, along with this near-term previous day's high from the last 3 days, those are the most significant liquidity pools right now if we're on the higher time frame, or if we go to the lower time frame as well. But on the higher time frame as well, this is the near-term liquidity, right? Would you agree with that? Let me know in the chat. Is that something you can agree with? Are we all in agreement with that? Just put a 1 in the chat if you agree. Yep. Okay, good. Good. Mind you, this may seem very simplistic, and it might be like, oh, I already know that. But how many of you guys actually use this? We may know it. This is a common thing. We may know a lot, but when it comes down to it, what are we actually paying attention to and using? Because we get a lot of times lost in all the things that we learn from ICT and all the different videos and new video here, new video there, new concept here, new model there. We forget the fact that there's basic things that can literally be the reason you succeed, right? I don't use every concept, right? I use what over the last 7 years has made sense to me within the ICT world, okay? And if you go talk to any other ICT student that has been here for a while, who's found their way, they'll tell you the same thing. You may come to them with 500 different things that you discovered and whatnot and haven't really back tested, but you're familiar with, and then try to apply that all in one second on every single chart at every minute. And then the mentor will tell you, if they've been here for a while, it's time to narrow your focus a little bit. What really truly makes sense? What have you actually studied? And what about the basics? What basic things have you been able to really internalize as significant things? And part of that, especially when it comes to identifying liquidity and what you think price is going to do next, which is your first objective as a trader, at least in this world of ICT, you got to understand the basics of liquidity. Part of the basics of liquidity has to do with previous days' highs and lows. And ICT talks about the last 3 days' highs and lows. So not many people utilize the importance of this. They're trying to capture whether it's going to target up here or down here, and they disregard some of the earlier things, some of the more basic things. Excuse me. So you want to make sure you're catching yourself if you feel that this, fits you. If you're like that type of person that's been avoiding some of the basic things, like Power 3, for example. It's a shocker to know how many people know about Power 3, but they don't really utilize it in the way that they should be. Power 3, market maker models, they're full models. And this liquidity idea that I'm talking about and have talked about for a while fits inside of that. Everything you do will fit inside of the realm of Power 3 and market maker models, at least with the framework, especially if you pay attention to them on the higher time frame, like the quarterly, weekly, monthly, daily time frames. Okay, everything fits inside of the framework. It's like a puzzle board, right? You know how a puzzle board, but you put the pieces inside and you can find like the outer layer first and then work your way in. Well, it's very similar with this, right? When it comes to Power 3 and market maker models. Power 3 and market maker models are like the puzzle board, the outer exterior portion. And then as you go deeper, you start to see more of a clear picture, and every piece fits nicely inside of these two concepts, right? I use both of them for my overall frameworks whenever I'm trying to internalize what price is trying to do, okay? And I encourage you, if you haven't thought about it this way, to really start thinking about it this way, because over time, as you gain experience, as your wisdom increases, you're going to be shocked at how much more complex you made this. How many things were just added for needless reasons because you thought that all the information, getting all the information and then applying everything was the right way, when it's actually ass backwards. You're not supposed to do that. ICT's never told you to do that. No one on the internet has told you to do that. And if they did, they're not profitable. They don't know what they're talking about, right? Because if think about it, if you have very particular things that you're focused on and you have all the information you need to make a decision, which doesn't require every concept, what's the point in adding or, putting all different types of things in there if you can already make a decision? Aside from, people trying to look smart, which in the process, they actually look really dumb, right? Because people that have been here for a while know the truth, right? So I want you guys, all of you, whether you watch this later on or those of you that are on here right now, I want you to audit what you're overall doing every single day. From higher time frame, how do you determine bias, to how you determine entries. And if you have a million things that makes it hard to make a decision, you need to start to prune, because I'm sure there's a lot of redundancy, right? And of course, part of being in this community, especially part of the private community, I'm here to help you guys sift through some of the nonsense and maybe prune what needs to be pruned, add what needs to be added, focus on other things at first and then get to other things later. That's the benefit in having a mentor, someone that's willing to help you, right? Otherwise, you have to figure this out on your own, like I had to, until I, swallowed my pride and said, yeah, I actually need some one-on-one help. You know what I mean? And I'm glad I did, right? So again, keep in mind the basics. When you master the basics, Power 3 is basic, right? It can be advanced, but Power 3 is basic. Understanding near-term liquidity is pretty basic. Session highs and lows, previous day's highs and lows. Those are my two favorite pools of liquidity, because every day you can have a setup. Prices take in session highs or lows to then target previous day's highs or lows, depending on which direction we're aiming at, right? Many times it'll take both previous session high and low and previous day's high and low, right? If we're real excited and volatile. So there's a lot of counterparty and then targeting that's taking place. There's always a stop run that leads to another attack of some liquidity, right? So it'll be an opposite raid before any big moves happen. There's always a raid before a big move happens. There's always a raid before something happens. Even this is a type of a raid, right? It's taking liquidity from the previous candle. We're on the daily chart. So that becomes very significant when one candle reaches below another or above another and then starts to rip in whatever direction it's headed in. So I want you to do this as a study as well. I want you to go in and look at every single big price move on whatever asset you like to study. And I want you to observe how many times in a single price leg a stop run takes place before a run overall happens. Because ICT is mentioned explicitly on numerous occasions. Big moves cannot happen. The lion's portion, the major moves, cannot happen and will not happen unless there's a stop raid first. That's why we wait for a stop run. Because what is it doing? What's the functionality in a stop run? If it stops or takes out sell stops or sell side liquidity and then decides to run towards buy side liquidity or PD array, what is happening? Can you guys describe to me? Let's see if you guys can explain it and make this interactive. Can you explain to me what is happening when price runs below sell stops and then targets buy stops? What is happening internally? It's not just taking stops, right? To just take stops, right? It's doing something. There's a function behind it. So let me know in the chat if you guys can describe that. If you can't, just say I can't describe it. It fuels the bigger move. What does that mean though, DJ? Like think about if there's students that don't know what that means, right? What does that sincerely mean? It fuels the bigger move. So yeah, let me know. If anyone else also knows, feel free to just mention your opinion. Again, this is important stuff rather than me just giving you answers to everything, because you got to think. Because when you're in the market, who's there to think for you? Nobody, right? So you gotta internalize what's happening and actually fully understand, right? So let me know in the chat, what happens when there's a stop run? What is actually happening aside from them just taking stops, just to take stops? All right, DJ said it fuels the bigger move. But what does that mean? Right? What does it mean by them fueling the other move? And if you don't know, just say, I don't know. Manipulating or filling orders. Okay. That's one thing. Okay. Filling orders, manipulating. That's a good one. Any other descriptions? So guys, let me know. Okay, so to add on to what Maddie said, manipulating or filling orders. What is that? What is that doing aside from that? Or in the process of it doing that, if it runs down, manipulates, fills orders, and then rips the other way, what is happening? Aside from just, manipulating, right? The functionality behind that, they're running down, filling orders, manipulating, but they're loading up counterparty liquidity. So then they can take profit at the opposing side. So that is the, I guess, dictionary definition of what a stop run is doing when it rips the other way. Because a lot of people talk about these things, and they don't actually understand what the functionality is. And it's one thing to understand something on a surface level, but it's also another totally different thing to understand what is sincerely going on, aside from just like a buzzword here, buzzword there, or just a broad type of statement about things, right? So when price needs to have a winner and a loser on both sides. So the reason we wait for stop runs is because we want to see the opposite traders get engaged. So it's manipulation, and of course, going down to scoop up liquidity to, like DJ said a second ago, fuel the bigger move towards the opposing liquidity, right? And if there's no stop run, many times there's SMT, so there's a crack in correlation. So they're going to leave those levels available, especially if it's at something like this, which is a balanced price range, or a bullish order block, or a breaker, or whatever the case may be, right? So that is what's actually happening when you're looking at a stop run, right? That's why it's important. You have to see visually, at least for us, the other side of liquidity being engaged before we look for, say, a breaker or some other model that we're looking to engage, right? It's very important to understand these things, right? Because most people, again, they just know things on a surface level. And when you understand the inner components of what's happening with certain concepts, it makes you more likely to be able to wait for the stop run, for example. Because what is it doing? It's visually showing you, okay, I'm pulling in orders to the opposite end. If you're bullish, you should wait for that. Because now you know when you get a change in state of delivery, after we have scooped up and manipulated the sell side liquidity, if we get change in state of delivery after that happens, going to the upside, that change in state becomes a whole lot more meaningful, because now you understand, okay, the opposite end has been triggered. I have clear targets above me. So now when I get a change in state or a breaker or whatever the case may be, that stop run should now hold, and we should be able to get up there. When it does a stop run like this, what is it also leaving behind right there when it does that in terms of liquidity? Let me know in the chat. And if you don't know, just let me know. The hell was that? So when there's a stop raid right here, in terms of liquidity, what is it leaving behind? Buy stops are above. It has nothing to do with stops, buy or sell stops either. So we took this liquidity and we started rallying the other way. In terms of liquidity profiling, what is left in here? And again, if you don't know, just let me know. It's good to be interactive in this because you'll learn a lot more. If I just tell you the answers, you're probably just it's going to go over your head, right? Trust me. Right? I've taught this stuff long enough to know, like, if students are just spectators, just watching a person that knows, and they're not trying to think of the answers, they don't learn as fast. I've taught over 200 people, and it is a clear distinction. Students that just watch videos or just want all the answers every time, they don't learn as much. They'll learn over time because you have no choice, especially if you're listening to someone that every week shows you, every day shows you that they know what's happening. Okay, it leaves a swing low. Okay. What else? So in terms of liquidity profiling, what does that leave? If we go low, takes stops, and then goes higher, what else can you think of at that low? The same thing's true if it runs above the high, right? And then goes lower as well. It is creating a swing, of course. But what type of liquidity is it leaving there? Because we scooped up orders and ran up with the intention to go above this high. So because we got that stop run, what is left behind? Right? It's definitely important that I pull these answers out of you guys if you can't answer it. It makes this even more important that I do it this way. Because whenever we have liquidity that gets engaged, if we don't know what kind of liquidity is being left behind, how are you supposed to know what's high probability or low probability? How are you supposed to know, based on the liquidity characteristics, if that low is going to hold or not? Right? There's a couple factors that allow for your understanding of that, but this is one of the big ones right here that I'm trying to get you to answer, right? This leaves high resistance liquidity. Okay, if it left a failure swing, that's low resistance liquidity, like we've talked about over the last couple of years at this point. So if we see a stop run, we've not only scooped liquidity, all these are details that you get when you see a stop run, right? We see that it not only took liquidity. If there's a PD array there, then obviously we hit a PD array as well, which amplifies the strength behind this overall move, right? So we have orders positioned on the opposite end. If we can get a change in state, that's nice too. Order block maybe. But we have high resistance liquidity, orders from the opposite end being scooped up as we rip the other way. If you get a change in state or any other PD array, inversion or whatever, that follows that stop run, it's high probability that the next side is going to be taken out. The opposing side is going to be taken out. This is not only good on this time frame for narrative, which is a really big component to this, but it's also good in terms of a fractal nature. Because if this is a 5-minute chart and I can see price running down below these lows like this, and I have a clear target, maybe I'm bullish on the daily chart, right? If I could see this, it's highly influential, right? It's highly influential, okay? And so if some of this stuff went over your head or you couldn't think of it, I encourage you to write it down, these things that I just mentioned. Again, these are, I wouldn't say they're basic liquidity concepts, but they're very, very important, fundamental things to understand. And I talk about a lot of stuff on this channel. So there's a lot of things that'll go over your head, but we got to not let these types of things go over our head, right? Because these are foundational, very, very important things when it comes to the relationship liquidity has with other liquidity, right? And how to profile your liquidity. Is it high resistance or low resistance? How do you know if it's high resistance or low resistance? I've talked about that a lot on this channel, at least this year. I've talked about it a lot. right? I give a list of high resistance, a list of low resistant default liquidity, right? So yeah, Ralph, good morning, bro. Good morning, good morning, good morning. So yeah, so hopefully that makes sense. And again, getting back to what we see in price here. Again, we got Friday's high, Friday's low. Got that stop run in here. We're back inside this high to that low. That's a weekly high, weekly low. So aside from everything else, if we deleted everything else on the chart, this liquidity and that liquidity and this range is our most significant liquidity pool at this point. I think I have it high resistance and low resistance in the high resistance, low resistance section in the private group. Do I have it here? I don't know where I put it. I thought I put it in there. Yeah, I guess. Yeah, I guess I put it somewhere. I got low probability trading. I must have not, because I made it when I made something like this when I made this one. So I got to go look for it. Yeah. Could have swore I had it there. Yeah, I guess I'll put that in there today. Could have swore I put it here somewhere. Guess not. Okay, so yeah, I'll make sure that I put that after the call for sure. Could have swore I put it there. No. Yeah, that's interesting. I don't know where I put it. I thought I put it over there. But yeah, I'll make sure I go put that. Let me write that down real quick so I don't forget. I don't know where I put it. That's wild. I did do it on the call on a Sunday call like this, and I told you guys to take a screenshot of it. But you know, we were probably talking about a lot of stuff, so some of you probably forgot. But yeah, so I'll make sure I put that in there, DJ. So yeah, again, we're inside this range. If we're looking at this asset here, let's actually pull the others up too. Use those for extra context. So if we move around, 30-year, 10-year, do got relative equal highs up there. That makes me even more confident that we will look to try to target the buy side because these are correlated, 5-year, 10-year, 30-year. This is actually trading up into a large wick here on the 5-year. You can see there was SMT right there that led to the run. Type 2 dealing range, we took out this high. That puts this high in jeopardy. Those of you that have been studying the type 2 dealing range I've taught. Okay, we'll see what happens with this. Again, this has a stop run. So what happened? This high ended up taking out sell side liquidity. Scooped up orders here to go lower. Scooped up orders here before it looked to go higher. All right, scoop these orders up before it went targeted this low. There's always a stop run before big moves happen. So again, you want to take this drill and you want to go observe it, like I talked about a second ago, with whatever asset. It could be any asset. This is true on everything because, again, it has to do with liquidity, how to navigate liquidity. Okay, so again, the very first thing in terms of liquidity you look at is, again, Friday's high and low. That's the most recent. Price is going to open up inside that range. So if it's going to get up to this weekly high or weekly low, it's going to have to break either the Friday's high or Friday's low. If it's going to go lower, maybe the next candle opens up wicks above Friday's high, respects this bearish order block, and then breaks down, changing state of delivery here, right? Friday's high in that case would then be counterparty to maybe target the low, right? Maybe it takes out that high and then drops below this low. If it does that, then we could look and consider things like this. There's also a rejection block here that could be used as a target. You could see that the change in state of delivery here was very short-lived that we outlined last week. We looked for these levels to get targeted. All it did was take this one out, and then it stopped at the low of that fair value gap there, the inversion. And now we started running up again. So again, Friday's high, Friday's low, weekly high, weekly low from the previous week. We're inside the middle of that range almost. Well, a little bit above equilibrium. We have the other yields looking like they may want to bump up a little bit. We got equal highs on the, was that 10-year? So I wouldn't be surprised if they get a push through that. We have a low, high, failure swing. This is a mitigation block, but it's also a inverted rejection block. See those equal bodies? Stop run. Price, if it was going to be bearish, would have came up in here, respected this wick, and closed below this, and then started rapidly pushing lower. It didn't do that. We pushed deeper. So are we bullish or bearish? Well, it looks like bullish order blocks are holding. We do have a bunch of trend line liquidity down here that could get looked at. So if price breaks down, then of course we'll adjust and then look to see if it can target that. We still do have, in terms of the yields and the dollar, a pretty nasty correlation problem. So they're decoupled, the yields and the dollar. Okay. We have the market maker sell model for the dollar unfolding still, like I talked about for like the last, 2-3 weeks. Once we broke down through this, got below this fair value gap, we have accumulation to distribution. So market maker sell model from a quarterly breaker. That's what this blue shaded area is on the dollar. And if this is trustworthy, we would like to generally see the bonds and yields support that. Instead, the dollar is following what the bonds are doing, and the yields are doing the opposite, right? So we'll have to keep that in mind. Like I said, the decoupling is something you got to consider. So it's a higher risk environment when we see the bonds and yields decoupled, right, to whatever asset they're supposed to follow. Obviously, the indices, and I'm assuming that, wow, that's interesting. We got the currencies and the yields following each other. Interesting. You should be doing the opposite. So there's a lot of decoupling happening. Next month on September 16th is the new quarter. So we got to keep in mind that the week before, week of, week after a new quarter rollover, there's contracts changing. Money is shifting hands from one contract to the other. Positions are closing in terms of options that run on a quarterly basis. So there's a lot of things that could shake up the condition. It's not stuff that's going to make us make a decision, bullish or bearish. Maybe it is, maybe it isn't, depending on what happens. But it is a moment where risk is going to be elevated. Okay, so you got to keep that in mind. It's like knowing what's happening on the battlefield when you're in war, right? Is there bombs blowing up or is there not bombs blowing up? Should you push hard aggressively or wait a minute and be more methodical, more risk averse? And until we get to that new quarter, if this decoupling continues, you're going to have to consider being a little risk averse. But again, we have this liquidity here. So when we open up, I'd like to see if we can get up above this. If price opens up, drops down, takes this low here, we may see that and then get price to run up. If it does do that and hang around in here, we're in consolidation. Okay. For now, my expectation is going to be that price may still look to want to go up to these highs here. I'd really like to see that. It's going to continue the crack and correlation. If this does happen and the dollar can recover from this and this ends up getting above this here, then that would make me interested in seeing this correlation fall in line. At any moment, they could flip the switch. The bonds and yields are not a market to play with. right? They're not a market to disregard, because every country has a bond market and a yield market. That influences what the interest rates are for things like home loans, business loans, basically things that have to do with business and pretty large portions of economic growth. So if there's a decoupling in this or big changes happening, it's going to affect whatever market it is that you trade. If it's the indices, again, if the bond market here, the T-note, that's what it's called, 10-year, 5-year, 30-year T-note or T-bond futures. Why did it have two of the same? That was weird. But these are what impacts in a positive correlation or positive influence the foreign currencies and the indices. The dollar is impacted by the yield market. Excuse me. So yeah, if you haven't wrote that down, after I've talked about it for years, week after week, damn near day after day, you need to write that down. Okay. But yeah, so we'll see what happens. I want to see this go up. If that goes up, then this right here should go lower. We walked this market like a dog up to the lows, and then we just been back and forth here, kind of consolidating inside this previous balanced price range, low, high, lower, low, right up to the midpoint, and it's still accelerating. So we got high, low, failure swing. So not only do we have that breaker get respected above us, we now have a mitigation block resting here as well. And we have trend line liquidity, which I think is pretty tasty. Actually got somewhat relative equal lows here. Okay. So we'll see what that leads to. I can actually remove that. Using that low. Okay. And so again, if this keeps going lower, that's going to have an underlying impact on this going lower. You see how that has had an impact, right? We had a big drop in the indices, right? There's been not really much of a drop here in the currencies because there's a lot happening on the back end when it comes to currencies. Okay. But we see the heavy impact that's taking place in the indices with a bearish bond market. We should be seeing the opposite with the dollar because that's the correlation. That's how it works, right? But since we don't, we got to keep the relationship in mind, but we got to just go off of what price does real time, and things that are correlated go off of those assets. And with the indices, luckily we have 4 assets that we could go off of: the currencies, and then of course the 3 indices themselves, and commodities, right? And obviously the yields, or the bonds, since they're correlated. Okay, so if all of those agree, then someone's lying. I don't think that multiple assets will be lying over the one pair of assets, being the yields and the dollar. I don't think that multiple would be lying at once. Sometimes they do, obviously, but it's more likely that 1 or 2 are liars or something's happening to them. And if you've been paying any attention at all to what's happening in the world right now, the dollar and interest rates are being heavily impacted, right? So the 30-year interest rate is 5%. 10-year, the 10-year, a little bit shorter term, it's 4, almost 5. This one's about 4.5% as well. So a little bit different because of the difference in length of the loans. So, it doesn't really impact what we're going to decide to do, but just, something to keep tabs on. But yeah, so I'm going to expect this to go up here for the yields, lower for the bonds. Liquidity that we're looking at are these. We also have close near-term PD arrays being the fair value gap here. So we're going to have to keep that in mind. I think I'm actually going to use this instead of that. So we'll see how this is traded. If we can get above that, we'll have a change in state. We have liquidity here, liquidity here, liquidity here, and then we also have this wick with the quadrants that we're going to have to also identify. Okay, and we'll watch that as a target before it gets to the upper level. And if you can catch say you were to catch a trade and it ran all the way up into this. Do you really need it to take the high out? You could leave some on, but if you hit something like this and your target's up there, take some off, or take all of it off. Me personally, I would take all of it off, right? Especially if I catch a nice run. I don't need to catch the high for my ego, right? If it's going to get there, it's going to get there, and it is what it is. But I'm not here to live for the internet. I'm here to pay my bills. Okay? And paying your bills doesn't require you to get the full target every time. So you want to condition yourself to be content with things like this, right? Or an approach like this when it comes to targeting. Okay? So we'll see how this unfolds, but that's my opinion. Now, if this was to break down aggressively and then we were to get closer to this low, let's say down this lower part, that becomes a little bit more likely that, again, we're going to target this and then this low. But again, that's high resistance. So I wouldn't be surprised if they were to go down like this. If they did reject from here, they go down aggressively, look like they're going to take it, and then they fail, stutter a little bit, maybe run up, take stops again, create this as low resistance, get it away from the high resistance, and then give us a really strong sell-off as a result of that phenomenon. That is called deferred liquidity. When it has a high resistance level, the price trades into, it'll stop. It won't go all the way through it most times because they're going to try to transition this from high resistance to low resistance. So a stop run, high resistance, to a failure swing, low resistance. Right? That's the most simplistic way to view high resistance and low resistance as well. Obviously, there's other things like trading into consolidation, right? Like if there's consolidation here and price drops lower and you're trying to see it get up into this, especially if there's like a stop run like that, many times it's going to be high resistance. It's going to leave that deferred liquidity and then look to go up while everybody's thinking it's just going to fly every time. We're over here thinking in the way that price actually offers liquidity, and it goes from high resistance to low resistance all the time. If there's a stop run, in order for it to get through this high, many times, not every time, but many times, most of the time, you're going to see it defer that liquidity, set a low, take the low, and then rally up, or immediately come back down to a low that's already formed, take it, then you get some of the greatest market maker buy or sell models, if it's bearish, that you'll ever be a part of. Okay, it's one of my favorite market maker model scenarios when we turn high resistance to low resistance with deferred liquidity and then accelerate off that deferred liquidity swing low that forms. Okay, so yeah, so that's my opinion on this asset. Do you guys have any questions? So this week with Warsh and the whole symposium, and maybe I may come to light, may not raise the interest rate. Yeah, I mean, there's conversations, Emmanuel, about how Warsh may be given like a sleight of hand type thing, make it sound like he's going to raise rates, but then the impact, because of him saying he might raise rates, because the impact already would show up many times because the market anticipates what's happening or what's going to happen in the future because it's all programmed, right? They already know what's going to happen. But many times he won't even have to really do anything. At least that's what they're saying, to get the same effect. So, whether he does or doesn't, it is what it is. We'll be ready for it. But I think this week is definitely going to have that in focus, especially with the whole symposium. There's a lot of the big wigs in the financial industry that are going to be coming together. So, we'll keep tabs on it. We'll talk about all those details in the private group as it unfolds. In order to be paid more now, dollars going down, anything pegged against it will go up. Yeah, I agree. It's the risk on, risk off, right? So yeah, we'll see what happens. Continued downside in dollar means all these other assets are going to look pretty nice as long as they manage things properly. Because we also have the Japan carry trade that may look to unwind if they have to cut rates or raise rates in Japan. So we'll see what happens. We'll keep tabs on it. We're on all the different developments like white on rice, as you guys know, constantly connected and making decisions. So again, hopefully all this stuff makes sense. But that's about it. If this was the NASDAQ and I saw this, I'd be thinking the same stuff. So everything that you learn here is universal. It could be transferred to other things. But these assets, there's a reason I stick to these and spend such a long time talking about these assets every week, because they are a critical component to my trust in a particular condition. Okay? Because this can tell you if a consolidation is going to be meaningful in the NASDAQ or the indices and the currencies as a whole, or if a trend is going to be something that's worth really putting size behind, right? Or considering, a particular trend as a very confirmed, clear, aggressive trending move, right? This helps you identify that. When you see the bonds and yields correlation working perfectly as it's supposed to, and it's trending, the other assets have the ability to trend if they choose to do so. So if you catch a trend on the asset you're trading, while understanding this, you can rest assured that that trend is very reliable, or it should be very reliable, right? Unless some other factors come into play, right? So yeah, this is my opinion on this. These are things that we're looking at. So hopefully you guys are clear on that. So if we move now to the DXY, we got the DXY changing state of delivery on the monthly. So we're really going to have to pay attention to what that's going to be resulting in. I've been calling for downside. If you've been here for a while and are diligent and watch these videos, by now, if you've been here for a couple of months, you see just how much we call something and it works out, right? Literally every single week we're calling something, and if we have to adjust, we adjust. But those moments are very far and few between, to be honest. If you go back and look at the recorded sessions, you see that this is the truth, right? We're here calling the market like Houdini every week, right? And if something goes wrong, we're there to quickly adjust and get back in line. There hasn't been a moment in the last 5 years where we have looked at the market and been like, oh, I'm confused. What is it possibly going to do? There's so many different things, right? It's been years since we've had that opinion, right? So again, and everything's recorded. You don't got to take my word for it, right? Those of you that have been here for a while know this is the facts, because what we do actually works, right? 7 years with ICT, studying as you're supposed to, that's what the results should be. You know what I mean? It should be expected. So yeah. Whoops. Take this off. So when we're looking at the dollar, like I said, we are rejecting from this 3-month/monthly bearish breaker. Can actually clean up some of these things up here. Price ran up into this. We wanted to see that monthly fair value gap get tagged with how aggressive it was, but it set the rejection block, refused to trade through the wick, and then we started looking to try to seek price go lower. We talked about accumulation, manipulation, distribution, rebalance, redelivery, in anticipation for it to get up here, but it ended up, as you can see, failing and then broke back down towards this low. In this instance, when it broke down through the midpoint, that's when I triggered the adjustment to then be bearish. Okay. And again, this is all recorded. Everything that we talked about in this moment, everything I'm mentioning here was talked about. You just got to go find the date, go to the Sunday call. We'll go to the Tuesday call in this case. And you could see that I was talking about this when it declined in here. If it stayed below the midpoint right there, that was what would trigger us to go lower. And then we broke down through this low. I called this as a breaker. I said, we're going to keep going lower. Then I called this as a market maker sell model, which we're still inside of. And I'm still going to continue to have that opinion. Okay. Because why not? Right? What is telling us that that's not the case? We may see this because it's been so aggressive. We may see this thing run back a little bit to try to come into this fair value gap in here. Right, there's nothing wrong with that. Honestly, I would only like to see it come maybe into this vicinity. We have accumulation, distribution, respected that accumulation in the sell model. Now we should see something similar to this. Right? If we go get the exact equilibrium, okay, where is equilibrium? There it is. Okay. So yeah, as long as price can stay inside of this little range in here, I'm still in a market maker sell model. Now, if we see this thing get up above this candle's high here, that's our change in state of delivery. And then we would look to try to see this as a market maker buy model. Okay. And then we would try to navigate it based on that. All right. So until that happens, I'm going to continue to be bearish. If we take the same approach in terms of liquidity identification that we used on the other asset and do the same thing and show you the fractal nature in this, we have the previous week's low, previous week's low, previous week's high, there. Then we got Friday's high and Friday's low, which in this case seems it's pretty much part of the weekly low. So we don't have to write Friday's low. We got Friday's high here. That's liquidity. So when price opens up, if we're thinking power 3, I'd like to see it get up into this PD array, manipulate for Sunday and Monday, set up in here, maybe go slow until maybe until Wednesday, honestly. That's the next red folder. Maybe this starts it and then this continues it. But nonetheless, I would like to see the manipulation higher, get up into this, set a high of the week, take out some liquidity, because again, we want to pull the opposite end into our trade if we're bearish. How do you do that? You go against them by going higher. Into what? Into what level? Certain liquidity. What liquidity? Friday's high and previous day's high as well. Thursday and Friday's high. That's the near-term liquidity in terms of highs and lows based on this time frame. And if it does that, we also want to have a PD array to couple that with, where the high of the week can form. When a news event, hopefully can give us that energy, right? Set the high and then start to go lower aggressively. Okay, and then we got previous day's low here, here, here. All of those levels are liquidity. So from price consolidating, manipulating up here, taking liquidity, hitting a PD array, sticking below the equilibrium of this accumulation. Preferably we stay below this candle here. If I'm being honest, I'd like to see us stay below that, because it's the last down candle before price ran higher in that accumulation. So in a sell model, that last down candle is your sensitive level, or at least it should be for distribution. Same thing over here, right? You notice that this candle, how impactful that was. Once it broke down below here, right, we set equal lows there, but once it broke down below here, this last down candle prior to the run up, look at how precise that is. After it broke that low, that range, the midpoint of that range, look at this candle. Look at how it respects that systematically. This is why I love market maker models. This is fractal. This happens on a 1 minute market maker model as well. And it can be used as an entry model. You can use this as an entry tactic too, but your stops, it's a daily chart. You're going to have like 500 point stop for maybe, a couple 1,000 point gain, but who's sitting through that, right? I'm not. This happens all day long. So why would I not take advantage of it, right? So yeah, with that being said, I can actually outline that and then note it as stated. Okay, so again, this equilibrium point from that whole range plus the high of that last candle, if we're bearish, these levels should be very sensitive. And all I'm looking for, again, is power 3. Very simplistic. Okay, we mapped out our previous week's high and low. We got our daily highs and lows. That's near-term liquidity. If price is going to be bearish this week and present us with a bearish power 3, we want to see it use all these components, okay, as it looks to try to go lower. Maybe it wicks a little bit deeper. That's fine. On a closing basis, I don't want to see it get above this level here, okay? So does everything make sense so far? Let me know in the chat. Just throw a 1 in the chat. If you've been getting value, don't forget to like the video. I pour so much into these calls. If you like this channel, you want to help me grow and help more people, or if you just want to say thank you, right? Just simply like the video, subscribe to the channel. It does a lot, and it keeps me motivated to do this, right? And if you guys have been following all the stuff that we do and you've been getting success, that is another thing that I really like to keep up with, because it's not only showing with people looking at the content, but it's showing you that the impact is taking place. It's taking root in people's real lives. And this stuff, I mean, I'm telling you, if you don't know by now, you will know eventually that this stuff is unrivaled. The amount of clarity that we have, the lack of gambling, the assurance that this can work for you, that's afforded to you by doing this stuff. I mean, it's indescribable, you know? So, and again, I'm grateful for those of you that do spend your time here every week, because you could be anywhere else, but you're here, you know? And I don't try to be extremely entertaining. I give you the facts and what I think price is going to do. Sometimes things get entertaining. I mean, it's entertaining personally for me if I was a student, because I'm getting so much value, you know, things that most people aren't talking about because they just don't know what they're talking about. So again, if you guys could do that for me, like the video, subscribe to the channel, means a lot. So yeah, but we should stay below here. So that's my line in the sand. And in a nutshell, this is pretty much all I'm looking at for this asset. You know, I could go over here and map this out as a suspension block, map this out as a suspension block. I might map this one out, actually. It's a nice little target to reach for. Aside from that, though, you have the daily low, daily low, daily low, and then relative equal lows here. So longer term horizon, I think that price could look to try to attack this. Why is it? Here we go. I think that our longer term liquidity target down there is reasonable. So we'll see what price wants to do. I will actually copy this. I need to start doing a better job of this, copying and pasting my stuff so we have them to review, rather than, you know, having you guys go look at the whole videos. You know, it's not that much work, right? It's not that much work to do it. So yeah. Yeah, throw 1 in the chat if everything makes sense so far, if you're able to follow along. My freaking shoulder hurts, dude. Oh, no. Did you guys hear that? That don't sound good. Freaking shoulders popping. What the fuck? Sheesh. I'm getting old, guys. 32. I don't think that's that old. I don't know. I think I was pretty brutal with myself back in the day, fighting and all these other things, playing sports. Yeah, well, hopefully, I need to keep up on my working out. I can't be a raisin later on in life. If you guys don't work out by now, you should. Or at least start eating better. You want to be at, you know, a high performance level when you do this. This is a performance sport, right? It's a mental performance sport. So you gotta treat it as such. it's a championship every day, right? So yeah, hopefully this stuff makes sense. Let me know if you guys have any questions. But with that being said, let's move on to the currencies. Okay, so we have dollar going lower, and the currencies are definitely in line with that. They have basically took out our targets up here. Do you guys remember, if you've been here for a while, I literally called this entire move. If you guys were paying attention, if you pay attention and look at what we're doing as valuable, the things that I'm doing in front of you are spectacular. And that's not to toot my own horn, but we're in an industry where most people have no clue what the hell they're talking about. I'm coming out here and calling hundreds, sometimes thousands of point moves right before your very eyes. And a lot of times it's going under the radar because I don't have a big following or whatever. Those of you that are here, I could care less about a big following. That's great if it happens. But those of you that are here, I hope you're paying attention, because the stuff that you're getting in terms of value, it cannot be overstated. The things that you're witnessing us call is insane. For me, it's insane that I'm able to do this every week, every quarter, right? And it's not overwhelmingly complex, but there are a reasonable amount of things. And I talk about them. I try to make them simplistic, but you got to take notes. You got to take what's being taught and back test. You got to ask questions. Apply yourself. Okay. If not, and this is like Netflix, God bless you, right? You can do that, but I want to help you. I'm not here to waste my time. I'm definitely not here to waste your time. I'm trying to pass the blessing forward. So look at this move. If you've been here for a while and you remember, or if you simply want to go back and vet what I'm saying, go back to this Sunday right here. Go back to this Sunday, 2 weeks ago. Shoot, go back to last Sunday. Okay? We literally called this. That's why this little thing is here. It's been here. I didn't just put this here. I called this liquidity too. I literally pointed that out and said that's probably going to be targeted if we get above this high. It got above that high and then did what? Traded this as a BPR. Excuse me. Got like random hiccups happening every 5 minutes. It's like one giant hiccup. I don't understand. But this was a breaker. It's also high, low, higher, high, balanced price range. It's also a market maker buy model that we were calling, which allowed us to be able to anticipate this going continuously higher. If you do zoom out a little bit more, you see this is a bigger market maker buy model. If you were to zoom into these pieces of price delivery, you'd see these are all small market maker buy models. Buy model, buy model. This one too, buy model, all the way up until we got up here to finish off the bigger one, right? So because we've hit this significant liquidity target up here, actually go paste that as well. Just bear with me. Sorry about that. I want to make sure I get this stuff out because I'd be forgetting, and I got to fix this. Something I got to improve on as a mentor. I just expect that students are going to do their due diligence and watch the videos, but you know how that goes. People's attention span is like squirrels, unfortunately. It's good to have these things too, so it's not only just because of that. Let me see. Not you guys. You guys are awesome. All right. So yeah. So again, with that being said, I talked about so much stuff in here to help justify this thing going high. I don't even trade this asset ever. I started here in this playground. This is how I, got my initial success, was trading GBPUSD. That was my baby. And that's why I trade NASDAQ, because I like the volatility. I can handle it. And if you were a Euro trader, the best thing you could do is move to the S&P, because the S&P is like the Euro versus the GBP, right? So yeah, that being said, let's actually remove these things. So I see this as a giant market maker buy model. Like, can you see it, right? Consolidation, accumulation, reaccumulation, smart money reversal, failure swing, breaker, high, low, higher, high. Just came down into it, respected it. Order flow has now changed to bullish. Look at the bullish PD arrays holding in price now. So now we have this small market maker buy model happening inside of a larger market maker buy model. So every time we get up above a previous level that was accumulation, I also talked about this. I'm not even going to get into this. I talked about it a lot already over the weeks. I mean, that was beautiful foresight. When we were down here, I said, oh, this right here is suspect. So if it gets above this high, we'll get up there. And it went right to it, to the tick. Well in advance, we called this. So again, just go review it, right? There's so much that we do that is constantly working out. It's hard to keep everything like in line. And, you know, that's why I got to just share it in the moment, because I'm gonna forget. There's just, we talk about so many things. We manage so many markets, call so many markets, and all of them seem to work out, you know, give or take like a handful of times when it doesn't. But the accuracy is nuts, right? And it's transferable if you apply yourself. But that's why I teach. You know, things get boring, right? When you just start to do things over and over and over, and you have time and all this stuff, it gets boring. You start wanting to do other things, and you know, some people choose to do bad things. I choose to want to, you know, try to pull you guys to clarity, you know, pass the blessing forward. So thank you for giving me that opportunity, by the way. But yeah, so we'll see if this thing can continue the market maker buy model. One thing that we do see here is this little gap right there. So if we get above that, as price prints higher in a market maker buy model, which is something that you want to consider, or just in a price leg that's moving higher, right? It doesn't have to be in a buy model, but the buy model framework on top of what I'm going to mention here, when price is moving higher and you see things on the left side that should act in an inverse nature, or you see, yeah, like the things are going to potentially act as an inverse nature. If you're bullish, everything that you pass on the left side should be looked at like you're a rock climber, like ICT says. You're climbing the mountain to a particular target of liquidity. Okay, so every time it hits stuff, you don't just look at something and think, okay, it took the stop, so I think it's going to reverse entirely. This is external range liquidity if we're bullish, yes. So what could happen is it reaches down to internal range liquidity. You know, that's fine. But not every time that price takes stops like this will it turn into a massive reversal. You shouldn't be thinking, I'm going to pick a top. You should be thinking, okay, well, the high is put in here. There's ways to obviously determine whether price is getting ready to flip around, which I'm not going to get into right now. But outside of that, you want to anticipate when price reaches into these opposing levels on the left and you're expecting it to go higher to a logical target, you want to look at them as gripping points. Price runs over it, comes down, uses it as a trampoline to then go higher, right? Runs up, grabs it, trampoline to go higher, until it starts to break aggressively and multiple PD arrays to the downside start to get violated in this instance. Okay. This is true also if this was a 1 minute chart. If it didn't say daily and it said 1 minute, and this was the range that I'm operating within, and I'm looking for this high up here, maybe it's London's high or something, I would still be looking at this the same way. So whether this is a daily, 4 hour, 30-second, 5 year, I don't care what time frame it is, the same principles apply. All right. So again, this looks really nice. If price can run down into this, kind of flirt with this a little bit. I don't want to see it come and close the whole entire range in. I don't want to see that. Okay. If it does do that, so be it. But yeah, we'll see what it wants to do in this. This would be my line in the sand right here. Oh no, I don't want to help. Okay. So that's our line in the sand. So if price was to get through that, I would start to question this, tapping this softly and then going higher. Okay. It may have to go down a little bit deeper if it does break this. Why am I not using the full fair value gap? Can you guys let me know? Let me know in the chat. Let's see who's been able to internalize that situation in here with the fair value gap. Why would I stop here with the fair value gap and put that as my line in the sand? Why would I not use the whole entire candle's fair value gap? Just let me know in the chat. Okay, Julian said consequent encroachment. I'd say that's incorrect for what I'm looking at, or what I'm wanting to mention. I mean, it is close to consequent encroachment, right? That could be a justified reason. Why would I expect this fair value gap not to be filled in entirely? What is in that area? Those of you that have been with me for a while, that would stop our interest to see it go down there. Yeah, Emmanuel, exactly. The previous candle wick here already offered delivery in that lower part of the fair value gap. So this is why that fair value gap should not fill the entire fair value gap. It's already a balanced price range. Okay, it's got buy side, sell side, buy side displacement, wick with displacement, right? So the only thing that doesn't have that and still could be offered to the sell side a little bit further is this upper part. So consequent encroachment is right there. And many times consequent encroachment, could be the line in the sand. Specifically, if you have something like this happen, you ideally in any run higher would like to, by default, see the upper 25, upper 50% of every PD rate that price trades into get respected if you're going to be bullish. That's just the basics of order flow, right? And reading the candlestick storyline, helping you justify a particular narrative, right? So consequent encroachment is not entirely wrong because it is in that area, but there's a little bit more detail, like I just mentioned. This kind of adds further context. So hopefully that is insightful to you. But yeah, so that's why this is the line in the sand. It's a BPR. We also have a completed market maker buy model. So completed buy model results in a balanced price range. So because it's a balanced price range, when it comes down into this high to that low extreme, upper 25 to 50% should never get traded to. The 25% is a bit reasonable, kind of. But that would push us down below here. So there's other context that I'm weighing out to kind of justify that I don't want to see it go down really deep into that. So ideally it stays in the upper octant from this low to this high. So the upper octant, which is right there, isn't it ironic how that perfectly aligns with our line in the sand? That is very interesting. Yeah, octant right there at the line in the sand. Crazy, huh? So yeah, with that being said, again, I wouldn't be surprised given power 3 dynamics that price goes lower, maybe spends a little bit of time in here. We got Friday's low, Friday's high. We also have previous week's low here, previous week's high here. So when price trades down into this range, which we're already inside of it, it's going to open up in that range. So before we get up to this, before we get down to here or down to here, depending on what it wants to really do, we're going to have to break through this range of liquidity first. So that is where your focus needs to be narrowed. And anything in close proximity to that is what you have to utilize as significant points of interest to navigate price, right? Intraday. Longer term, obviously, this is in a bigger potential swing. We may look to continue to run higher if dollar keeps going lower. We do a failure swing up here. Again, this is a market maker buy model. So again, I would really like to see price stay above, already above this little fair value gap with the volume imbalance there. So again, we got accumulation here, market maker buy model. So I think that we're in a buy program for the foreseeable future until something changes. What would change my opinion with this? Well, when we look at this weekly chart, breaking down below this would cause a change in state of delivery. So in the weekly chart, I would like to see that. If I'm going to be longer term bearish, doesn't mean I can't catch small shorts, right? Like shorting down into this to then go higher. I mean, we could still do that. Shorts could still be of interest. The underpinning of the market, especially with dollar going lower, is bullish for this asset. So again, with that being the case, I would probably like more so to see this get traded through and then change state before I look to decide, okay, the currencies are now overall bearish longer term for the next maybe quarter or the next month. Okay. So again, that's my opinion for this asset. We'll see what happens. Again, think power 3. I would like to see longer term if we can get up here. Before it gets up there, though, we have, this daily high here to look at. Daily high right there. Another daily high. This is a range that was a mitigation block. We used it here to go lower. So we're trading back up into that. So that's an opposing PD array to the uptrend. So whenever there's an opposing PD array being traded into in an uptrend, you can expect that it's going to be somewhat of a speed bump, right? It may be high resistance. So you can expect that price may look to try to retrace a little bit or hang around a little bit before it looks to try to go continuously in that direction it's headed in this case, bullish, right? So we may see a little bit of sell-off take place. It may offer that type of behavior. So we'll be ready for that. I would like to see it open up, drop down into this, stay above our levels in here, not breach our line in the sand, and then eventually get back above this. And once we do, I think it'll be off to the races up there, right? Because this here is low resistance. It's a larger low resistance swing. You notice how high resistance here? When it traded into it, it stopped it because, again, it's high resistance. And then price broke down. So now we have a failure swing in here. So if price gets up there, it's probably going to try to do it in a low resistance fashion, especially if the dollar wants to continue rampaging lower. Okay. Paste this before I forget. So yeah, let me know in the chat if you guys have any questions. What do you see? I'm going to get to gold in a little bit. Let me see. Do you guys have any questions on this asset or anything that we've talked about so far? But yeah, I'll get to gold in a little bit. Did I miss any questions? Doesn't look like it. All right. Well, with that being said, we will move on to the indices. I'll load up gold real quick. And I'm going to load up XRP too. I'm talking about XRP. Talked about this level in here. It's pretty wild how things that we do in futures is also in crypto, right? I mean, it's amazing. Look at XRP. I've been talking about XRP, been mentioning it. People don't like to listen though. Again, it's ain't financial advice, so it's probably best that you don't listen to me, and unless you have the same opinion that you've come up with on your own. But nonetheless, this stuff works on every asset, every single stock in the stock market, every single currency, commodity, every single crypto. I mean, it's nuts. Okay. But yeah, we'll get to gold in a minute. Wow. Just taking a glance at this. Oh, this is an old markup. It's old. We had other things talked about. This is my chart that I had for gold, is it? I don't know why that eyeball was still left there. We were targeting buy side up here. And yeah, I got through the sell side invalidation and my target up here, this line. We had this outline for probably 2 weeks, 3 weeks, once it got up above this high here. If you guys remember, I know Tony probably remembers. I don't think he's on right now though. But we've been calling for gold to get up here, right? I said that is my target. I literally laid that out. I could probably go back and look at which video from the last couple of weeks, but we did this analysis. That eyeball that you just, I mean, the eyeball in this was kind of old. That was before we rallied up here. I think there was SMT. Yeah, there was SMT between gold and silver here. Was there? No, there wasn't. No. Oh, wait, whoops. Oh, yeah, there was. There was SMT. See that? Lower lows, higher lows. So that was nice. Yeah, we'll get to gold in a minute. So yeah, when we're looking at the indices, go to the weekly chart. What do you see? Well, I personally see a retracement, stop run, retracement. We do got a change in state here. So that's potentially short term, especially if dollar's going to keep dropping. Oh, Ralph, yeah. Oh, yeah, you've been here for a while, huh, Ralph? Yeah, you were here actually. I remember. I think you and Tony are the ones that asked me about gold the most. I don't know why. I don't want to say I don't know why you guys trade gold, because I understand why, because it does move when it does move. But I don't know. I think there's better assets like these assets. But you know, if that's the flavor you like and you're doing well, who am I, right, to tell you what to do, right? If it ain't broke, don't fix it. You know, stick to it. I would encourage you to have maybe at least one extra asset that you spend a lot of time on, like the S&P or the NASDAQ. These are just like amazing markets. They don't need like economic or geopolitical events to really get some fire under it. You know what I mean? So I just invest in it. Oh, okay. Yeah, hey, that's another good reason to pay attention to what's happening in the chart, to know how to read the futures market, because you can know how to invest in it long term. You know, you get to keep up with the overall circumstances, right? And where your assets going. I own gold and silver, so I have a lot of different assets. Only thing I don't have, well, one thing that I don't have is property yet. But I'm waiting for good opportunity. Because when I buy a home, it's going to be first it's going to be an investment property, then it's going to be another investment property, and then it's going to be a home that I want to live in, getting the mortgage paid by those other homes. And then I'm going to play Monopoly, right? The way that all the rich people do. And that's how you know for a fact that you won't have to trade every day. You use trading to get into other assets that can give you residual income. And then you won't have to trade, right? if you don't want to. I'm going to be trading on my deathbed. I don't care how much money I have. Like, I don't care. I enjoy this. It's fun. It's meditation to me. It got me through some really, really difficult times in my life. When the whole world in my life was on fire, when I went into the chart, it's the only thing that would make me not think about what was happening in my life. And obviously that came with thorns, right? Because I just try to go too fast, try to do too much, try to make this happen sooner. But, I'm grateful for it. So yeah, I love this industry. Maybe not so much a lot of the people in the industry, because it's a lot of gross people taking advantage of others. But, you could be a good person and do this, and money will make you an even more amplified good person, because money only amplifies who you really are. And if someone's a scumbag, money, if they come across money, they're going to be even more of a scumbag, piece of shit, right? But money's not the root of all evil, right? The love of money is the root of all evil. And you got to love other things. I love what I do in the action of trading. I love being able to help other people. And money helps you do that a lot more. You know what I mean? Let me see. Exactly. Mass appeal. Yeah. But yeah, so when we're looking at the asset right here, these three assets, we have SMT at the highs, which is definitely something of concern to me. If we see the dollar start to pick up and breaks this inversion here, or just simply gets above this candle here, right? This right here is an inversion. If it was to get above it, if we were to close above it, that's how you know for a fact that we are done looking to go lower, at least for now. We do have this inversion in here that can give us an early sign if it was to close outside of it. The whole fair value gap in here, if we were to close outside of it, basically get up here, that would put us in position to target these equal highs. Okay. But as long as it stays below this and we keep this bearishness, like I talked about a second ago, with a wick and a displacement, I don't expect the whole fair value gap to be traded to. Julian, hopefully you're still here to see this. So this wick to displacement, that's a BPR in there. Okay. So with that being the case, when price looks to come back into this, I don't want to see the whole fair value gap get traded to. We already laid out stuff about the DXY and what we want to see it hold. So if this is going to keep going lower, we have price cornered. If it was to get above this fair value gap, then we're going to go higher, and then these will go lower. If this runs up here, which is what my expectation is, I want price to go up into this, respect the lower 25% of this part of the range, right? From this wick low to the high right here on this candle, creating the fair value gap. I want to see it come up into that, create bearish power 3, stay inside of the market maker sell model accumulation to distribution, which is here, okay? And then see price continue to go lower, and then we have very obvious, look at price right here. Can you not see with the forecasting future anticipation that this PD array is going to be used in the market maker sell model to then target these clean relative equal lows? Is that not blatantly obvious that looks like it could happen? I think it's highly probable, especially if we respect this. I would like to see this be very quick. We are in second stage distribution here. Actually go mention this real quick. This is a fair value gap on a monthly chart from so long ago. You see that? That's where this pink line or pink box comes from. I've used this for about almost a full year. Almost a full year I've used this same PD array to when it trades around it to then justify a particular idea. It's a very, very useful area. Actually clear this off a little bit. Should stay below here. Again, think about what's converging in this area. We have market maker sell model. Okay. We have the fair value gap. It's an accumulation to distribution. We have a monthly change in state of delivery. If we can get this, month to close below that. So right there. We have the previous monthly reclaimed fair value gap that I've used numerous times. We have, what else? I mean, just that alone is a lot. And we have relative equal lows down here. Okay. I mean, it's beautiful. Is it not? Is this not beautiful? Does this not make sense? Right? Does this not make sense? Right? Let me know in the chat if it does make sense, right? If all these overall pieces of analysis in here, you've been able to follow along. Let me know in the chat. Again, don't forget to like the video, subscribe to the channel if you get value. Nobody's doing it like we're doing it, okay? It's just a fact. Ralph, you're welcome. Thank you too for always hopping on and valuing what we do here. Thank you to all of you. You know what I mean? Yo, Empire, what's up, bro? What's up, bro? No worries. No worries. All right, for sure. So, Empire, I encourage you to definitely, as always, if you guys show up late, just try to look at some of the stuff that we talk about. I am going to post screenshots in the free group and my private group. I'm trying to get better at keeping everything like there so you guys don't have to always, rewatch every time. Although, there's a lot of value in doing that. But yeah. Yeah, no worries, bro. Hey, that's dedication right there, bro. At work, running the video back. That's awesome. So yeah, that being said, let's continue to focus here. So we got this weekly perspective. It just simply looks like we've retraced. We did set rejection block up here. So we do got to pay close attention to this fair value gap. We're actually inside of this on the Dow. For those of you that do trade the Dow, as some of you that trade the Dow, I don't. I can't stand the Dow. But, we're still able to call it. Still does what we say it's going to do. We got this daily bullish order block in here. Move to the daily chart, daily bullish order block, internal range liquidity. All we need to really justify that this is going to try to keep going higher and then eventually get this trend line liquidity under control. We already have a stop run down here and a rejection block. If this thing does break down and gets below this yellow box to the lower part, we'll just look at that as a sell model and then quickly adjust to then target the rejection block in the low. But I don't necessarily want to see that happen. So we'll see, if we have to adjust, then we have to adjust, but I don't think we're going to have to. But when price looks to get up above this, that'll be our change in state. We'll know that the retracement's over, and now it's time to start looking for this to be a buy model. And you got your accumulation levels clearly identified in here. It's just the previous bearish order blocks on this time frame. And if you were to go to the 1 hour chart, you can kind of see a little bit more visually, right? It's accumulation in here, If it gets above it, you treat it as distribution to go higher. If it gets above here, distribution to go higher. Above here, distribution to go higher until we get to our full terminus. Okay. And when it comes to this, right, we've just peaked below the lows here. This is a weekly suspension block for the NASDAQ, which is basically this whole entire gap from this gap up here, fair value gap, and then volume imbalance is a little gap in there if you zoom in. So that's a suspension block. So we want to see it stay in the upper 25, upper 50%. It is. I want to see this low being swept turn into a fractal low. So the next candle, we're going to have to see maybe it punches lower to take these guys out before it goes higher. But I would really like to see, I'd like to see an attempt to try to go lower, but then a failure, and then continue respect to the buy side delivery. Okay. Yeah, no worries, Emmanuel. I'll see you tomorrow morning. Have a good rest of your Sunday, bro. But yeah, so my expectation is to see, at least from this weekly chart, the next candle open up, either attempt to take this low and fail, or attempt to take it, sweep it, but then immediately break to the buy side, and then hopefully leave a rejection block when it comes to looking at this weekly perspective. And then when it comes to the daily chart, we're in accumulation in here. Okay. So hopefully that accumulation, previous accumulation, can hold. If it doesn't, and say it runs up in here and then we break down below this low, like I mentioned, could be the case. Depending on how it breaks it, if it breaks it and then immediately gets above, yet again, there's still life to see this thing go higher, especially with dollar going lower. Now, if the dollar ends up breaking the levels that we talked about to the upside, and then we see this thing start to tank and get below this fair value gap, then again, we're going to have to consider that. Okay. I'm actually going to move this so I can put this there as a reference. Because if this thing gets below this fair value gap here, that's going to be a problem. Because then if it closes below it, that's a confirmed inversion, just like how this was, and it continued to drop. So we're just going to have to wait and see what that wants to do. But in the meantime, we're going to watch this low. This is either going to attempt to target that low one more time, use this stop run as the means to then go higher. Change in state of delivery on this daily chart is going to be this candle. If it breaks above that, it's a bullish order block / change in state. And then we can use that as a launching pad inside of that weekly fair value gap retracement that we saw to then trigger another run higher, looking to target up here. Again, something that is on my mind is this SMT. Okay, so that SMT on this higher time frame has to be considered, because if this runs up and then fails to get above this and breaks down, like I said, and we close below this, this will be one change in state of delivery after we broke lower. And then if this is an up candle or it creates another one that then gets broken, that's a double change in state. That is significant if price is going to look to turn around and go lower and respect this SMT. That's how we'll confirm that bullishness should be put to the side for a little while. And then, we'd adjust and then look to go lower, target this low, the gap, this low, the gap, and then anything else that we could discover in there along its way to these relative equal lows down here at these lows, right? Where's my liquidity markup? There it is. Okay. So yeah, and again, we got weekly high here, weekly low. So let me actually map that out for completeness sake. Previous weekly low, previous weekly high. Okay. Then again, this whole thing right here, that's the weekly suspension block as well. That's the one that we're trading into. So we're above 50% right now. So we'll see how that can be treated, okay? And again, if this runs up, just to reiterate, if this runs up, can't close above this to change state, and then starts to break down and we take this low aggressively, especially if it leaves an up candle that does take this high and then breaks it. Again, that's a breaker, also an order block change in state with a failure to go higher to change state to the upside, and then a confirmed lower change in state, not respecting this weekly retracement to buy side delivery. It'll then be failing and then look to try to take out a little bit more of this range to the downside. And we got overall range equilibrium from the low extreme to the high here. So yeah, with that being said, do you guys have any questions? I think that's really all I have for the indices that I want to focus on going into next week. But yeah, if all that makes sense, then we'll move on to gold, maybe even crypto. Look at some XRP before we get out of here, or anything else if you guys have any recommendations. Again, I appreciate you guys sticking with me, hanging out, as you guys always do. You could be anywhere else, but you're here, so I greatly appreciate that you want to hear what I have to say. But yeah, we punch above our weight in terms of the skill set, that's for sure. Like the skill set relative to how much of a following we have. I mean, these people, they are just not competition. They're lightweights compared to what we do. I appreciate you, Ralph. All right. Well, again, hopefully all this stuff makes sense. Go to the daily. Take a screenshot. Put a note real quick. Let's leave this little note so there's no confusion. See, I'm very thorough with you guys, right? So I hope you guys take a lot of notes. There's just so much stuff that we talk about. I wish I had someone that was willing to be available like I allow myself to be. It would have saved me so much time. I think about this all the time. You know. All right, so hopefully all this stuff makes sense, okay? I'll take a screenshot and get that out of here. Okay, there we go. All right, now let's go to gold. Let's get a feel for if I was going to trade this. Immediately, I see these equal highs up here. As another target. Move up a little bit. Take this whole range in here as a market maker buy model. That last up candle right there. So I'll say that part of my line in the sand for this is going to be there. Okay. Last up candle in the accumulation to obviously drop before it got above it. So this whole range high to low, you can also use high to low. That's the full accumulation to distribution. You take the midpoint of that. You want to stay in the upper 25 to 50%, or you could take the last up candle prior to the turnaround and you can outline that. Sometimes it's multiple candles, right? Like if I was to go to the 2-day chart, that daily has one candle here. So you could really use the 2-day, so the larger one, or you could just simply utilize this. I'm going to just simply use this. The last up candle. But yeah, we got our line in the sand right there. So because we've already ran up pretty aggressively here, I wouldn't be surprised if they try to pull it back a little bit. We could see this here. That's interesting. This is the accumulation. It's the accumulation to distribution. Okay, so if geopolitics keeps going the way that it is, because again, some geopolitical news event can come out and this whole thing can be upset and it can go all the way down. If they want to manipulate it, they will. Because gold and silver, a lot of commodities are, well, everything's pretty much controlled, but these are really, really wildly manipulated. And a bomb can drop, something can happen. All the stuff that's happening in the world right now is absolutely bullish long term for the for these markets. Because again, they're real commodities. Supply and demand factors are real. Countries are buying more gold and silver than they ever have. In particular, gold. They're buying more and more and more and more. I think the future is going to have a gold-backed currency again, even if it's like a crypto or digital. Every digital coin or whatever is going to be backed by something physical. I think that's to bring stability to the financial world. In my opinion, they're going to need to do something. that has to do with real assets, because this whole fractional reserve system, I mean, it's been great, but having unlimited printing unlimited money just caused chaos, inflation. I mean, it's pulled a lot of countries up, but at the same time, it's like, all right, well, it's time to get back to reality. 40 trillion in debt. I mean, that's insane. I don't know what they're gonna do. It's too much. With AI though, I think we have an opportunity to grow out of the debt, restructure it. There's obviously ways around it, but are we going to be able to have a clean transition for the whole world? Is everyone going to agree? Or are we going to have to go into another world war to make this happen? Because the last 2 world wars, big societal changes across the globe, power structure shifts took place. So it feels like we're in a power struggle and like a structural change in the whole world. So hopefully for all of our sakes, we can kind of have peace in some way. And I'm sick of this fractional reserve system. I'm sick of it, honestly. Knowing that our dollar loses value constantly, I mean, it boggles my mind how these greedy politicians allowed this to happen. It makes no sense. It really doesn't. Oh, it does make sense. They're greedy. You know what I mean? A bunch of nonsense. And now we got to restructure 40 trillion in debt. I mean, somebody should have did something a long time ago. So it's everybody's fault. Everyone that's been, a part of this debacle. They've turned our currency in the US into a Ponzi scheme. Every dollar that's in fluctuation right now or in circulation is someone's debt, right? It says $100 note or whatever, it says note on it. It's because when the fiat currency first came out, it was introduced because people didn't want to carry around gold all the time. So they brought their gold to the bank held it, and then they gave you a paper note saying this is how much this is worth, right? And that you could spend this amount and it'll sell off this amount of gold. But then geniuses said, oh, let's just, move it to, well, I'm starting to learn a lot more about why Nixon chose to move us off the gold standard. I guess it was there was a tax from other countries on the US financially, and against our dollar. They were making, because every dollar was backed by gold, and the scarcity value of gold made the dollars worth a lot of money. But then there was, I think it was China that was trying to do this, who was trying to mine a bunch of gold and flood the market with gold to make it so our dollars became less valuable because the quantity of gold ended up being so much. So the government at that time, apparently their justification was, oh, let's just attach it to oil instead, right? Because, not everyone has oil and gas. There's a lot of countries that can find a lot of gold, but let's just try to, isolate these people that are trying to attack us and cement ourselves, and also give ourselves the ability to print unlimited money because there's basically unlimited oil and gas. And so then we transitioned into that, and fast forward, what a horrible decision, right? Long term. In the meantime, it was a reasonable decision based on some of the facts on the ground at that time, if you do some research on it. But it's just a mess. It's just a mess. So for the sake of everybody, at least those in the US, hopefully they figure it out. And hopefully all these countries get their shit together, because wars are not the answer. It's just not the answer. They don't care though. It's such a bigger game that's being played that a lot of us aren't even privy to, or privy to. So yeah, it's my 2 cents on gold and other things. But yeah, so I want to see if gold can get up into here. maybe up into here. I wouldn't be surprised because we've had 3 consecutive bullish aggressive days, or was it 6 days straight? Has it been 6 days? No. 1. Yeah, it hasn't been consecutive. In terms of weeks, though, it's been 1, 2, 3, 4, 5 straight weeks. So we're due for some type of little correction if it does come. We may do it inside here. We're inside of a bearish order block. So if we've been really aggressive and price hits a opposing PD array, you can expect that that's going to be a speed bump. What happens with a speed bump? It'll probably try to pull us back a little bit. You know what I mean? So we'll see if that's what's going to be the case. If that is the case, if we drop down a little bit, we got this down candle. Again, we have this gap in here. I would like to see a small, shallow retracement if it is going to do so. Because again, we got this market maker buy model, right? We're also already above the accumulation to distribution. So again, the line in the sand here is because of that. So if we do get retracement for our power of 3, I would like to see it do something like that. Maybe one candle just wicks into this, creates an immediate rebalance, and then breaks aggressively. If we see that, we're going to get up here in a hurry. This one in particular is what I really like. I can find my markup. Where is it at? It is. So yeah, that one looks nice. Another thing I want you to pay attention to as well. You see this gap in here? That's a little inefficiency that might want to get reutilized. Now that the mode of delivery has turned to bullish, that little gap in there with this wick to this high, we got sell side, buy side offered. All of that is pretty much balanced. The only thing that hasn't been balanced is that right there, right? Now that price has moved up. In this delivery here, when it was bearish, right? See how it displaced through that there? Price came back and it only tapped up into that low and left part of that available. That happened when it was bearish because, again, in this context, it ended up becoming a balanced price range as the narrative continued to be bearish. Now that price has now shifted its sentiment, this level becomes something of interest again. So price is now reaching up into that. That's something I never taught on this channel before, by the way. So I would take notes if I were you. But yeah, so now that right there becomes a really nice target. We also have highs, obviously, and then these equal highs up here too. Okay, so that's my opinion. I'd still be looking for bullish power 3. So we'll see if it can open up, drop, and then go higher. Utilize these levels, utilize the market maker model. You see how the market maker model framework is like I said, a puzzle board, and all these other internal details is like the pieces to the puzzle to get us to complete that market maker model, right? Or complete the continued buy side delivery. So if we can get that to unfold, should be pretty interesting. Maybe I'll look to take a trade on gold. Actually, I really like this. At least to get up into here. Now, again, if the line in the sand gets met and we smash through this low, then again, we got to start thinking for the possibility of us going the other way. We got equilibrium here. If we smash through that, come back and stay below equilibrium, we'll then switch to a market maker sell model and then look to target these relative equal lows here, okay? So that's how we would adjust if price did decide to fail and break through this longer term, right? And then obviously in the lower time frame, there's a lot that we could talk about. There could be another sell model in here that forms relative to this small piece of price delivery if we do fail to get up here. And maybe dollar looks to rally, right? If it does rally, that would be a cause for this to go ahead and do that. And Parsa, can you go over pullback entries to order blocks in Q this last month? I've gone smoke trading order blocks. They're my main entry point along with IVGs, but mostly order blocks. Yeah, so with an order block, if you can catch an order block, I mean, this will probably be helpful here. To catch the best order blocks, at least some of the best, You want to find them forming after a stop run takes place, something I talked about earlier. You obviously want to have your draw on liquidity on the higher time frame. You want to try to spot them inside of a macro. And when you enter an order block, the way that you are watching, when you're watching an order block, the way that you're thinking is, okay, if this is sincerely going to be that change in state of delivery, when price returns into it, we need to stay in that upper 25 to 50%. Once it gets through that, red flags should be going off in your head, right? And then once it overtakes it and closes below it entirely, you should be out of the trade entirely. Okay? Because if you have an order block entry here, for example, whoops, if you enter on, say, this order block and price does something like this, right, and then comes back and plays games, you should already be out. Once the midpoint is taken out, max, in my opinion, if you're using the order blocks for verification, is the full body of the order block. If it trades below the body of that order block, that's a problem. If it has a large wick, I mean, you could use the wick too. But again, you want your draw on liquidity to be accurate from that daily chart. When price pulls down into order blocks, when you trade the order block, start to require a stop run first before you identify an order block as an order block. Because what's happening here when it takes stops and forms the order block is you're allowing for counterparty liquidity. If you're correct, it should rip from that. So that's a first indication that you're correct. Then you want to, of course, see the order block itself, trade above it, come back, respect the upper 50, upper 25%. If it closes below the order block low, right, whether that's the body or the wick, there's red flags going on and you got to wait, or just collapse the trade, wait for the next one. But again, one of the best models that you will ever participate in if you like order blocks is when you get a stop run and then you see an order block form. So like a stop run in here, and then this displacement trades below an order block. That is a barn burner, especially if, even in this scenario, if you want to see a larger PD array as like the core of this idea forming to run higher. This order block should be forming inside of a bigger PD array, a bigger narrative. And so that change in state and stop run becomes more significant. Same thing is true here, right? You want to see, if you're taking an order block entry, a stop run, a larger PD array for context, clear targets down below, maybe a gap, equal lows. And then you want to see, obviously, the lower 25 to 50% when it trades back into it. That's when you should enter, when it trades back into it, right? Preferably in that lower 25%. Something you can also do to get even more precise with your entry, so you're not just thinking order block is there, I'm going to enter on the order block just when it goes into it at all. You can actually take the fib and break that body of the order block down into quadrants. And every quadrant is an entry above the 50% if it's bullish. If once it gets down into it too deep, again, don't even consider it if it drives too deeply into the order block, unless that drive deep into the order block results in the delivery lower being just a wick and you get a body closure outside of it again. Then you can consider, okay, it's a little bit late, but I could still potentially get in as long as context is still available. But once it closes below the order block midpoint, I would say that that's not ideal, right? And you want to have these deeper contexts behind you, preferably a stop run before you take any order block. Let a stop run happen first. Then when the order block forms or gets traded through, you now have multiple things going for you. Counterparty has been triggered, and now you got change in state of delivery after counterparty has been triggered and price started to run away. And you want to have clear targets, right? Clear narrative that you're trading with. If you don't have a clear direction of where price is going to go, what is going on? The first thing you need to determine as a trader doing this stuff, at least in ICT camp, is where's price going to go on that higher time frame? Because if you don't know that, we're shooting in the dark on those lower time frames until we get more experience, more familiar with how to navigate intraday volatility, right? So it should always have a higher time frame direction supporting you. You should always, if you're taking my opinion, have some type of stop run before you look to execute whatever PD array you're looking at, especially fair value gaps and inversion fair value gaps, especially order blocks, especially breakers, obviously, right? Breakers require a stop run. Mitigation blocks themselves, like say this is the high, mitigation blocks trigger the stop run like initially, then create a failure swing and go, versus a breaker that may stop before to set equal highs, then run it up there, then go lower, right? So the mitigation block stops or takes stops first, then creates a failure swing before it goes. A breaker automatically takes stops after it fails the first time, and then it aggressively reprices lower. And then again, when you see that, again, what I just talked about in terms of order blocks can potentially help you get in before a breaker forms if you have the context available. And then the breaker can be a point in which you use to pyramid, right? And the breaker has multiple entry tactics inside of it. It has four entry spots. A lot of people only know one. I talk about four, right? The high, then an inversion fair value gap near the high, the normal breaker entry, and then the return into, the secondary return. So like, this is the first return into the breaker, the original one, and then this second one right here, that's a later fourth entry with all this on the back end, if your narrative is still available. Okay, just some little extra pointers there for you guys. But I think that just about does it. I guess we'll call it a day on that. Again, hopefully you guys got value from today. Let me know if you need any help with anything. Just hit me with a DM. I'm more than happy to have conversations with you guys. Don't forget to like the video, subscribe to the channel if you got value today. If you have any friends that trade that you think can benefit from these types of really detailed conversations and analysis, very organized processes and whatnot, definitely, if you could, share the channel. I'd really appreciate that. And yeah, so hopefully you guys have a good rest of your day. God bless you guys. Thanks for all love and support as always. Thank you guys for sticking with me this long. Hopefully you guys got more than you came here for, right? But with that being said, I'll let you guys get back to your weekend. Let me know if you need anything. Have a good Sunday, and I'll catch you guys here on YouTube on Tuesday around like 5:30, maybe 6. I don't know. We'll see. Anywhere from 5 o'clock to 6 a.m. Pacific Standard Time. Okay. So yeah. With that being said, take care, you guys. Let me know if you need anything. Okay. God bless.